Welcome back to AlgoBot, your channel for exploring automated trading systems for MetaTrader 5. I'm the AlgoBot narrator, and today we're taking a close, educational look at a strategy called Sequence Complexity Trend Shift. This expert advisor borrows an idea from information theory, called Lempel-Ziv complexity, to measure how ordered or how random the recent market pattern really is. Over the next few minutes, you'll learn what that means, how the strategy signals its entries and exits, and how the code puts it all together. Remember, this is for educational purposes only and never financial advice. Let's get started. So what does the Sequence Complexity Trend Shift Expert Advisor actually do? At its heart, this strategy treats the market as a stream of symbols rather than a stream of prices. Over a rolling window of bars, 40 by default, it records whether each bar closed up or down, writing a 1 for an up bar and a 0 for a down bar. That gives it a simple binary string that captures the recent rhythm of the market. The strategy then measures the complexity of that string using a classic information theory tool called Lempel-Ziv complexity. The idea is beautifully simple. If the up and down pattern looks like a series of coin flips, it is essentially incompressible, and the normalized complexity reads close to 1. That describes directionless chop, where every bar is a fresh guess. But when a genuine structure forms, for example, a persistent run of same-sign closes, the pattern becomes highly compressible, and the complexity reading drops well below 1. Because a repeating 2-bar pattern is also compressible, complexity on its own cannot tell a real trend from a tight back and forth. So the strategy pairs it with a net sign bias, comparing the number of up bars to the number of down bars, and adds an EMA direction gate as a final price-based confirmation. Only a sequence that is compressed and leaning decisively one way and agreeing with the moving average counts as a trend. This approach works on any single time frame you choose in the tester, and it is fully symmetric, taking both long and short positions. It may appeal to traders who are curious about non-traditional, statistically grounded indicators and who prefer a rules-based, systematic style. As always, this is educational information only, and trading always carries the risk of loss. Let's walk through exactly how the strategy makes its decisions, step by step. On every completed bar, the EA rebuilds its binary sequence from the most recent window of closes. It maps each close-to-close change to a bit, counts the up bars and the down bars, and computes the normalized Lempel-Ziv complexity of the whole string. It also reads an exponential moving average, 50 periods by default, and an average true range value for sizing its risk. The core insight is that the strategy does not simply want low complexity. It wants the moment of transition. It remembers the complexity reading from the previous bar and compares it to the current one. A fresh collapse occurs when the complexity was sitting at or above the threshold, which defaults to 0.85, and has now dropped below it on this bar. That collapse marks the instant that order crystallizes out of noise, which the strategy interprets as the birth of a directional leg. When that fresh collapse happens, the EA checks 2 more conditions before acting. For a long, the net sign bias must be positive beyond the minimum bias setting, and the closing price must be above the moving average. For a short, the bias must be negative beyond that same minimum, and the close must be below the moving average. If everything lines up, the strategy signals an entry in that direction. Notice how balanced this is. The long and short rules are perfect mirror images of each other. Now for managing the trade. When the entry is placed, the EA immediately attaches 2 protective levels derived from the average true range. The stop loss sits at the stop multiplier, 2 by default, times the ATR away from entry. The take profit sits at the target multiplier, 3 by default, times the ATR in the favorable direction. That gives a reward to risk shape of 3 to 2, or 1.5 to 1. Defined by volatility rather than a fixed number of pips. On top of those static levels, the strategy adds an early regime failure exit. If the complexity climbs back above the threshold multiplied by the exit multiplier, the sequence has dissolved back into an unpredictable coin flip. The strategy reads that as the leg being over and closes the position early rather than waiting for the stop. Only 1 position per magic number is held at a time, so the system never stacks trades. Let's look at the actual MetaQuotes language code that drives this, just as you'd see it in MetaEditor. At the top are the input parameters you can adjust in the tester. Windows sets how many bars form the sign sequence. Max complexity is the threshold, defaulting to 0.85, below which the sequence is judged structured. Min bias is the minimum lean required to call a direction. Emma period is the moving average confirmation gate. Exit CPLX multiple controls the early exit, and the ATR period, stop multiplier, and target multiplier shape the risk. Lot sets the order size. Below the inputs is the heart of the logic. The Boolean called fresh collapse is true only when the previous complexity was at or above max complexity, and the current complexity has just dropped below it. That single line captures the transition the whole strategy is built around. Inside that condition, you can see both sides, side by side. The first branch handles the long. If the bias is at or above min bias, and price is up, meaning above the EMA, it calls trienter with true. The second branch handles the short. If the bias is at or below the negative of min bias, and price is below the EMA, it calls trienter with false. The two are exact mirror images. Finally, inside the entry routine, the stop distance is the stop multiplier times ATR, and the target distance is the target multiplier times ATR. For a long, the stop sits below and the target above. For a short, they simply flip. The code then calls trade.buy or trade.sell with those stop and target levels attached. That's the entire decision engine, in just a handful of readable lines. Now let's bring the whole strategy to life on this illustrative chart. Up top you can see the price candles with the exponential moving average drawn as a line weaving through them. Below the price is the subpanel that really matters here, the normalized Lempel-Ziv complexity, plotted against its threshold line at 0.85. Remember our rule of thumb. When this reading floats high, up near 1, the market is behaving like a coin flip, and the panel sits in the shaded random zone. When it drops below the threshold into the lower zone, a compressible structure has formed. Look at the first few candles on the left. Price is drifting sideways in a choppy, indecisive range, one bar up, the next bar down, with no follow-through. Down in the subpanel, the complexity line is riding high above the threshold, telling us the up and down pattern is essentially random. The strategy does nothing here. It is patiently waiting, because entering into this kind of noise is exactly what it is designed to avoid. Then watch the transition. As we reach the buy entry candle, price begins to lift, and the recent bars start stringing together a run of higher closes. That run is highly compressible, and you can see the complexity line collapse down through the threshold into the structured zone. This is the fresh collapse the EA is built around. At that same moment, the net sign bias has turned positive because up bars now outnumber down bars, and the close has pushed above the moving average. All three conditions agree, so the strategy signals a long at the buy entry marker. From there, the up leg unfolds. The next candles print steadily higher. The moving average slopes up beneath price, and the complexity reading stays quietly down in the structured zone, confirming the order is holding together. The stop loss sits below the entry at 2 times the average true range, while the take profit rides above at 3 times ATR, a reward to risk shape of roughly 1.5 to 1. Price climbs into that take profit target, and the long trade is booked at the take profit marker. Notice that as the leg matures, the complexity begins ticking back up toward the threshold, a hint that the clean structure is starting to fade. Now the character of the market changes again. After the peak, price rolls over, the first couple of bars are choppy, and the complexity line pops back above the threshold into the random zone. Once more the strategy stands aside, refusing to guess in the noise. Watch the sell setup develop. As we reach the sell entry candle, price breaks lower, and the recent bars stack up a run of lower closes. That down run is just as compressible as the earlier up run, and the complexity line collapses back below the threshold, another fresh transition, but this time to the downside. The net sign bias has turned negative, with down bars now dominating, and the close has slipped beneath the moving average. The mirror image short conditions are satisfied, so the strategy signals a short at the sell entry marker. The down leg then plays out. Each candle carves a fresh low, the moving average rolls over above price, and the complexity holds in the structured zone while the move has momentum. The protective stop sits above the entry at 2 times ATR, and the take profit waits below at 3 times ATR. Price slides down into that target, and the short is booked at the second take-profit marker. So across a single sequence, you've seen both halves of this symmetric system. A long born from an upward collapse in complexity, and a short born from a downward one. Each entered on the transition from randomness into structure, and each managed by volatility-based stops and targets, or by an early exit if that structure dissolves. And that brings us to the end of our educational tour of the Sequence Complexity Trend Shift Expert Advisor. Today we explored how it converts the market's recent up and down pattern into a binary string, measures its order with Lempel-Ziv complexity, and looks for the transition where that complexity collapses out of the random band into genuine structure. We saw how the net sign bias and the moving average gate confirm the direction, and how ATR-based stops, targets, and an early regime failure exit manage each trade. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 strategy studies. You can find more at www.algobot.live. Remember, everything here is educational information only and not financial advice. Past performance does not guarantee future results. Trade responsibly.